English only, yeah?
ठीक है, done. I'm adding participants now.
Yeah.
Okay. Krishna, you can go on mute. Good evening, everyone. I welcome all of you to today's session on GSTR 9+9C, which is organized by the Members Committee of Bhanushali Chartered Accountants Forum under the banner of Shri Kachi Bhanushali Seva Samaj Trust. Without much ado, and before starting the session, I would like our president, CA Meera Joisher, to give a small introduction about our BCF.
और मेरी स्क्रीन भी विजिबल है, कोई एक जन कंफर्म कर देगा ऑनलाइन में? ओके, ठीक। सो अभी जैसे पुनीत सर ने बताया कि टेलीप्राइम 6.2 चल रहा है और जो लेटेस्ट रिलीज है इट इज ऑलमोस्ट।
Hello.
Yes.
Yeah, I had some disturbance. Okay. So welcome everyone. I see people have started coming in already, and we are just starting at like 5:05. Team BCAF welcomes you. If I just give you brief about what BCAF is, that is Bhanushali Chartered Accountant Forum. हम क्या कर रहे हैं? This is a body of, as the name suggests, all the Bhanushali Chartered Accountants, wherein we come together, where the students, the members, senior members, veterans, and we share knowledge, we share our opinions. It is a platform जहाँ पे हम openly discuss करते हैं अपनी queries, and mutually we share our knowledge ताकि both learn from each other. We've been conducting sessions in the past. We are coming up with many sessions. Today, Nihar, I welcome you to share your insights. Past के sessions पे बात करें तो for students we've had specific sessions on how to prepare for your exams. For members who just qualified, we had an hand-holding on how to go ahead. For students we had sessions on how to select your articleship form. तो यहाँ पे, and for members tax filing को लेके आज GSTR 9+9C है तो उसको लेके. So it is a continuous learning process that we are all here together for. Under this forum, we are here for last 10 years and this learning journey continues uninterrupted. We welcome you all to join us for a long period of time going ahead also. We've had eminent speakers for each of the subjects. Today we have Nihar, and we are really grateful that you've accepted our invitation to share your knowledge and come to our platform. We look forward to see you in many other sessions also. I welcome the participants who've attended our sessions in the past, would know how freely you all can come up with your sessions, your queries, and discuss over here, unless there is something which is far too against the, I would say, something that cannot be discussed openly as a chartered accountant forum. Other than that, ये हमारा अपना forum है. आप please अपने queries हम निहाल से definitely सब पूछ सकते हैं. तो आप openly आके अपने questions भी पूछो, and at BCF you are free to connect with us for any help, technical, personal, as a student that you seek from us, any kind of guidance that you seek from us. And this short introduction of what BCF is here for, I hand it over back to forum to take the session forward so that we can hear a lot of insights from Nihar.
Thank you, CA Meera Joisher, for giving us insights on what is actually BCF doing. Now, coming to today's session, I would like to introduce our today's speaker, CA Nihar Darod. Nihar Darod is a practicing chartered accountant and also holds an LLB degree. He serves as a founder and principal at his firm, Excel Quest Consulting Partners. Prior to this role, he was a partner and indirect tax head at Shah and Savla LLP. He has also worked in the indirect tax verticals of PwC India and BDO India for 5 years. He has an experience of more than a decade in advising domestic as well as multinational clients. His focus is in the areas of multi-state or pan-India GST litigation management, GST due diligence, indirect tax planning and compliance, business consulting for SMEs and MSMEs. He is a member of the Committee of MSME and Startup of WIRC of ICAR for the year 2025-26. He has also been an elected member of Vikasa Mumbai for the year 2011-12, and he also contributes his views to articles or comments in various tax publications and is a regular speaker at various professional forums. So let's have a huge round of applause for our today's speaker, CA Nihar Darod. Nihar, thank you for accepting our invitation, and now over to you.
Thank you so much, Forum, for giving me this opportunity, and to Bhanushali Chartered Accountants Forum for giving me this platform to share my views on the much discussed and debated topic, the changes in GSTR 9 and 9C. I think this year has just not been great, not just for chartered accountants, but all across. We've seen a lot of turbulences all across the world, and I think chartered accountants and their bread and butter in terms of the work remains, nothing different than that. We've seen the income tax deadlines getting extended, and the chartered accountants really getting frustrated. And the cherry on the cake was the so-called changes in the GSTR 9 format. Uh, I think, yeah, I mean, there are a lot of issues around it. But yeah, so as and when we go ahead with my presentation, I'll be happy to share and discuss on this. So I'll just quickly share my screen. Is my screen visible?
Yes, Nihar, it is visible. Nihar, it was, yes.
Okay. Yeah, now it's visible, right?
Yes, Nihar.
Okay. I'll just straight away start with my presentation and the agenda. So I think what are we gonna do for today is try and see the revised format and overview of how the changes have happened, what are the implications. Fortunately or unfortunately, the GSTIN has come up with certain FAQs. These FAQs or clarifications are not coming from the CBIC, to be very frank, but from the GSTN portal as a part of the update section, wherein they've tried, or I would say they made their best attempt to kind of explain what changes are to be done and how the reporting has to be done. And then we'll quickly move towards some case studies, which we have deliberated upon. And I'm sure that has been a discussion across the entire chartered accountant forums as to how those reportings of overlapping transactions in terms of ITC, etc., would happen. And then maybe we would just conclude, on what it is for us, because ultimately, as chartered accountants, while these amendments and everything would happen, but how do we foresee things and what exactly do we need to do, and what is it for us? That is what is going to be the real take home. So quickly on the legal provisions, we all know that Section 44 and corresponding rule is what drives the GSTR 9 and 9C. And as the Section 44 says that every registered person other than an ISD, a tax deductor or collector, or a casual taxable person or a non-resident taxable person. So anybody coming into these categories are not required to file a GSTR 9 and 9C. But apart from that, every other registered taxable person will be required to file a 9 and 9C or an annual return. Then, yes, it has to be filed for each financial year in a specified form, which is 9. And in addition to that, there's a reconciliation statement in the form of 9C. We all know earlier it was subject to attest function by the chartered accountants up till March 20, and thereafter it's all going as a self-certified thing. So attest function is no more required by the chartered accountants, and the deadline is 31st December, which is coming very, very soon. We've seen some representations seeking extensions in terms of the deadline to file the GSTR 9 and 9C. So really not sure, but I think those representations have just erupted in the last 1 or 2 days. Let's see whether an extension really comes in or not. Only time can tell us, but I think we should all be ready to try and ensure that we don't carry forward the previous year's work in the next calendar year at least. And I'm sure we all understand that a lot of our billings and collections and all are dependent on not having an extension in these deadlines. So it's better that we have the minimalist possible extension or probably no extension, to be very frank. But all said and done, let's see how the government reacts to it. So on the format, I would just like to run through the entire format for two purposes. One, that we have a recap of what exactly has to be done, and at the same time, we will also discuss what are those small looking and apparently small changes that are there in the formats. But yeah, sometimes they do have a very critical implication, to be very frank. So that's, I mean, GSTR 9 and 9C is typically divided into a couple of parts. It's like part 1 to 6, 7. The part 1 is very preliminary details, wherein the financial year, GST and legal name, etc. These are all auto-populated on the GST portal. Then we go to the part 2 where the real data feeding actually happens. And the part 2 primarily is talking about all your tax liabilities. And by tax liabilities, I would typically say two types of tax liabilities. One are your outward supply transactions, wherein you're required to pay taxes. And second are the inward supplies, wherein you are required to pay GST, probably under the reverse charge mechanism, or maybe as an e-commerce operator, you're required to pay taxes on behalf of the dealers that are registered on your e-commerce platform. So these are all transactions where I am required to pay tax to the government or where I am the taxpayer. So that is typically what the data is getting captured in the part 2. Again, it has been divided into various tables, primarily two tables, table 4 and table 5. 4 is the place where the taxpayer is required to report all the transactions that are related to or which are taxable, where a tax outflow is required from the taxpayer. And 5 is those kind of transactions where there's no tax outflow as far as the outward supply is concerned. So 4A is talking about all your B2C supplies, wherein you're supplying to a person who's not registered under GST, and this typically has to be made at a net level, so that is net of debit and credit note. So it's just a single line item that is required to report. Again, very similar to what you report in your GSTR 1 as well. Then we come to the 4B, which is a B2B supply. So any supplies that you made to your registered customers is to be reported over here. One quick line of caution over here is that when you're reporting or when you compare it with your GSTR 1, your B2B supplies also includes the SEZ supplies, whereas here SEZ has to be reported separately in 4D. So you'll have to kind of just be mindful of that and ensure that your normal B2B supplies, which are not to an SEZ unit, are reported in 4B. Then 4C is talking about all your zero rated supplies, which includes goods as well as services. But these are all transactions which are on payment of tax. So it's not a case where you would be. So if you made a export supply on LUT basis, it's not to be reported over here. Only an on payment transaction is to be reported here. 4D is your supplies to SEZ on payment of tax. 4E is your deemed export. Again, very important. Deemed export are transactions, under those specified notification where certain refund eligibilities are there. And in the past, we've seen that, taxpayers have faced challenges in claiming refund when these kind of reportings have inadvertently got clubbed with 4B. So again, if your client is making any supplies which are deemed export and is keen on claiming the refunds at a later stage, probably it would be important that you ensure that the reporting is done appropriately over here. Next is the 4F, which is on advances. So again, this is to be reported at net level. So any transaction of services, taxable services where you've received advances and you want to, and you have rather paid taxes on advance basis, and they remain unadjusted till the end of the year. So you'll have to report those advances over here. This again has to be reported on net basis. So net of advances, uh, uh, hypothetically saying if there is an advance in the previous financial year whose adjustment has been made in the current financial year, then you'll have to report a negative figure over here. So that is something which you'll have to be very careful about. 4G is transactions where you're required to pay tax under the reverse charge basis. So this includes all reverse charge transactions, right from your specified domestic reverse charge transactions to those import of services, etc. Wherever you are required to pay GST on reverse charge basis, this is something which you'll have to be mindful of. Next is 4G1, which was the new addition made last year, wherein the e-commerce operators were required to pay taxes on behalf of the registered vendors on their platform. So if I'm an e-commerce operator and I have, I have transactions where a supplier has made a sale or a supply transaction through my portal, and I'm the person who's able to pay tax under 9(5). I would be reporting all of that turnover over here in 4G1. Then a subtotal of 4A to G1 gets done here. Then any transaction pertaining to these, uh, uh, the first one, the A to E1, which are my outward supplies. If I've issued any credit notes pertaining to those transactions in the financial year, I would be reporting over here in 4I. 4J will have the debit notes for all those transactions, and 4K and L will have the transactions or supplies or tax which are declared or reduced through amendment. So, say for example, I have reported a transaction of say 100 rupee in month 1, say April, and subsequently in May or June, I realize that okay, this transaction is not 100 but say 120. So there are two ways to look at it. One is that I may report 100 rupee at B2B level, which is at 4 A, B, etc., and then report the additional 20 over here, which is also getting auto-populated based on the GSTR1, because the GSTR1 will also have that additional liability based on the amendment. Or alternate view is that I may not want to really report something at KNL, but report everything as 4B or 4C as the case may be, or 4A for that matter, wherein I'm not really kind of looking at reporting an amendment separately, but मेरा जो अभी transaction है जो actual है मैं उसी को report कर रहा हूँ. So that is also a possible view. Uh, I at this point in time I just want to put out one point over here, is that frankly in our office right since probably 1819, the consistent reporting that we have been following to report something in 4K and 4L is the transaction of previous financial year which have got reported in the next financial year, 3B. So any transaction of 23-24 for which the tax has been paid by me in GSTR 3B of 24-25 or reduced in 24-25, we have been reporting it in 4K and L. I think the two reasons why I do this is that there is a direct way of one, that I can match it with the previous year's 10 and 11. There's a direct reporting, and secondly, the tax liability which gets reported over here also matches to that extent with the table 9. जो टेबल 9 में इस बार एक चेंज आया है डिफरेंस का कॉलम, वो पहले कभी था ही नहीं. सो our intention was that my entire liability should get matched with the tax payment that I have reported in 3B. So for this purpose, we have been using 4K and L for reporting all previous year transactions reported or adjusted in the current financial year. This is slightly a deviation from what the notes to the GSTR 9 or the any other circulars, FAQs, or for that matter, technical guide issued by the IC has also mentioned. But this is what we have been reporting, and so far we've seen that this kind of helps in explaining to the officer at the time of the adjudication and audits that look, the previous year transactions which we have reported in current year are really matching and stuff like that. So that this is what we have been following. Next, going forward on that, then there's a subtotal, and then there's a total of whatever is the overall tax liability that I'm required to pay. And obviously, this includes the reverse charge and the e-commerce related tax liability. Next, we come to the part 5, the table 5 of part 2, which is talking about all your outward supplies where tax is not payable by you. So this includes your zero rated under LUT, your SEZ supplies under LUT, Then all your supplies where the recipient is required to pay on the reverse charge basis. So classic example is if I'm a transporter who's registered and I've opted for the scheme where my recipient would be paying the taxes under reverse charge basis. So the transporter would report his turnover under 5C. Then 5C1 is transactions where the e-commerce operator is going to pay the tax. So if I'm a supplier who has supplied the goods through an e-commerce operator and the e-commerce operator is going to pay the tax, so then my turnover gets reported over here. So say for example, I'm a wholesaler who's having a normal supply, offline supply as well as an online supply. So my offline supplies would get reported under table 4. But all those supplies where I have supplied through an e-commerce portal and the Amazons of the world are required to pay tax on that, then probably a 4C that transaction gets reported at 4C1, 5C1. Then 5D and E is talking about reporting the exempted and the nil rated, and we are all aware that there's a relaxation given that everything can get reported at exempted supplies. And then 5F is transactions which are non-GST supplies. So probably if I'm a person who's dealing into liquor or for that matter alcohol or maybe some of those things which are non-GST supplies, I would be reporting those at 5F, and then I have a grand total of that. And then any transactions related to the credit notes, debit notes, or amendments related to these exempt or non-taxable supplies is something which gets reported from 5H to 5K. And then we have some subtotals out there. And now table 5N is something where they are going to total the outward supply turnover as well as only the outward supply taxes. So mind you, this is one place where, and as you can see in the screen also, there is a minus of 4G and 4G1. So 4G is reverse charge and 4G1 is the e-commerce operator's liability. So again, those two transactions get excluded out here, and these are again auto-populated figures. So only reason to draw this attention is that at table total of table 4 includes all your tax liabilities, including the reverse charge, whereas the total at 5N only includes your outward supply turnover on which you're required to pay taxes. So that's on the part 2 front. Then we quickly move ahead on the part 3, which is where the real challenges are in terms of the amendments. So we are talking about the total ITC, which needs to be broken up into what has been claimed, what are the reversals, etc. So let me first run through the changes that have happened. What are the intention behind those changes, and then maybe we'll put some time in explaining how it is going to impact or discussing on how it is going to impact the reporting changes and what according to me could be some challenges also as far as these reportings are concerned. So quickly, the part 3 is about the ITC. So 6A is an auto-populated row or a table wherein all your gross ITC coming from the total of 4A, which includes all your ITC claim, whether it is import of goods, your reverse charge, your ISD ITC, or your 4A5, which is your total B2B ITC, or all the reclaimed ITC gets auto-populated over here at 6A. Now here, so far, the government always wanted us to just give the breakup of the 6A, and this is where the real challenge happened. That when the 6A was broken up into 6B to 6H, 6B and H were then totaled and put into a reconciliation at table 8, at table 8B, and then it would get compared with the 2A or 2B. And this is where, the officers always really, scratch their brains in trying to understand how could they really reconcile. Like when we were talking about the earlier financial years before 2B was introduced, the entire reconciliation was based on 2A, and we all know 2A being, not a static but a dynamic report. It keep on evolving, time and again. And this is where the officers always had a challenge that what is the data or which is the final GSTR 2A which needs to be compared. And we all know that 2A, which was used at the time of 3B or maybe at the time of GSTR 9 or maybe at the time of assessment, it all underwent a lot of changes. because of a very simple reason that 2A was a dynamic report. And this is where the officers really struggled. So that's when the 2B was introduced to kind of give the officers a better control to identify a static report which can be compared to the ITC which was claimed by the taxpayers. Now this again had its own challenges. It solved a bit of a problem where the at least the comparable data set changed from dynamic to static. However, when you look at the overlapping transactions, because see, GST you had a transaction where your previous year's ITC was claimed in the current year, previous year's transactions were reversed in the current year. Then you had current year transactions getting carried forward and claimed in the subsequent. So whenever the office was really audited or did an assessment for any financial year as far as your 2A or 2B, I mean 2B related reconciliations were concerned, the officer typically would have to look at a 3-year figure and try and see. So if he's adjudicating say 24-25, he will have to actually look at 23-24 partially, and would also have to look at 25-26 to ensure that look, even when the taxpayer is explaining or submitting that there is an overlap, etc., logically do the numbers set in. And we've seen instances where, because of this overlap happening year after year, the officers have sometimes gone on to seek data or reconciliation right from 17, 18 onward just to be double sure that, look, you're not claiming any excess ITC. And I mean, I would say they were not totally wrong because, yeah, there have been instances where, these kind of partial submissions have been used as a way out to kind of, match some numbers at a lot of places. So, this was a challenge which the officers faced, and therefore now when they had to compare even the 2B with the what the ITC was claimed, it had the previous year's claim, it had those reclaim related transactions, etc. So again, a lot of representation happened at the tax officer end, saying that look, even after this point in time, these reconciliations are still not manageable. And we also know that a lot of automated notices came purely based on the differences in 8D, which at a lot of time we've seen that those were all futile notices purely because of the uh, inadequacy of the reporting columns available at the GSTR 9 9C level. And therefore, I think the government rightly intended to ensure that the GSTR 9 format at least gets a bit of an amendment to kind of accommodate these kind of overlap multi-year transactions. And with that right intention and spirit, they really proceeded. But I don't know, somewhere this entire process seems to be a bit half-hearted. They kind of solved one problem to create maybe another, and that is something which we'll discuss as we move ahead. So with that background, the government decided that look, as far as this financial year is concerned, so again, going back a step back, I think time and again, department has been clarifying that when you're looking at GSTR 9 and 9C, we only want transactions related to current financial year, and that has been kind of communicated in all the clarifications and FAQs that have come, and that was very well settled also as far as your table 4 and 5 were concerned, because there it was much more easier. The taxpayers also had much control as far as their outward supply transactions are concerned, and the data was doing pretty much okay. uh, but as far as the ITC is concerned, I think there was a major challenge, and especially now that the 2B had come in, it was also dependent on the vendor to have his compliances done on time and that transaction getting reflected. So again, that challenge was there, and therefore, the department or maybe CBIC thought that now it's time to also have the ITC of that financial year kind of separated with the previous and the next financial year. And with that intent, these changes have been made. So this year, what they've introduced is they have divided the entire ITC, which has been claimed in 3B and which gets auto-populated in 6A, bifurcated into two things. One, what is it about the previous financial year that you have claimed in the 3B? So look, you find out that data and separate it at a totality basis at the initial level only. So all the ITC which is pertaining to the preceding financial year has to get reported at 6A1. And we'll as we go ahead, we'll also understand what exactly are we trying to speak over here. So that gets removed at the initial stage only, and the balance ITC, which logically also will be the ITC which is pertaining to the current financial year only, will get reported at 682. Now, here only thing is all the ITC which has been claimed in the current financial year, other than the ITC reclaimed under 37 and 37A. So 37 is the 180 days and 37A is where the supplier has not paid the tax. I have reversed it and then I have a right to reclaim that ITC. So only in these two cases, I will not report that reclaimed ITC over here. But apart from that, any other ITC of the previous financial year, which I have claimed in the 3B, should ideally get reported at 6A1. So the balancing figure is coming at A2, which logically should be the ITC, which is related to the current financial year. And that is what even the wording says, that net ITC of the financial year. So basically they're trying to say that, look, at A2, it's only the ITC of the current financial year, which you're trying to report over here. And now they want a breakup of this ITC into the previous breakups that were there. So we had a 6B, which wanted a breakup of all the B2B transactions, inputs, capital goods, and input services. Here again, inputs and input services can get reported into a single column, but capital goods have to be reported separately. I think the only reason I can foresee for this kind of a breakup between inputs and capital goods is the rule 42 and 43 reversals, because in case that is applicable, then if I'm going to report a single number as per the exemptions available for the previous financial years, it was very difficult to kind of identify how do I really, because rule 42 and 43 reversals have a very different formula to look at. So probably for that reason, this B2B ITC has to get separated. Inputs and input services can get clubbed, and capital goods will have to be reported separately. However, this is again is an option. So if a taxpayer intends to report inputs, capital goods, and input services separately, I think, and if you have the data, I mean, no harm in reporting. Then we have 4C, which is related to your RCM tax payments from unregistered vendors. And then the 6D is the RCM payments from the registered vendors. Then we have 6E, which is the import ITC which you are going to claim or which you have claimed in the 3B. Again, a breakup between inputs and capital goods has to be mentioned. 6F has the import of services, so reverse charge related to import of services has to get reported over here. So because we are reporting the reverse charge on import of service over here, I mean the input tax credit over here, so that will not get reported in the previous ones, which is 6C and D. We will report it separately. Apart from that, all domestic reverse charge transactions should ideally get reported in 6C and D. Then your input tax credit from an ISD. So if you have an ISD registration and the ITC has been transferred by the ISD to the respective location, should get reported over here. And last is the 6H, which is the amount of ITC reclaimed under the provisions of the Act. So this has gone a bit of a clarificatory amendment, to be very frank. And so any ITC which I'm reclaiming in the current financial year gets reported over here. So typically, your ITC, which is reclaimed under Rule 37, the 180 days reversal logic that gets here, 37A, which the department has also clarified. Then all your Rule 42 and 43 reversals, if those are reclaimed, like when you do a true up, true down at the end of the year, and if there is a reclaim of the ITC which is required to be done, so that probably will get qualified to get reported over here. And then the circular 170 reclaimed ITC, which is subsequent claim which is your actual claim, to be very frank, will also get reported over here in 6H. And then the total of that comes at 6I, and 6J is the difference column. So what the government is trying to say out here is, at 6A2 you have given the breakup of the current year's ITC which you have reported over, or for which you want to give the breakup. So ideally they expect that this should not have any differences. One clarification here is that earlier everybody, I mean, there was a practice wherein the gross ITC would get reported at 4A5 and the reversals, even the credit note reversals, would typically get reported in 4B. But I'm sure with that amendments that had come in and the auto-populated 2B figure started showing the net ITC at 4A5. And therefore, I think at a lot of places, taxpayers have now started reporting the net ITC, net of credit and debit notes. So again, I think if you have followed that reporting pattern of 4A5 being your net ITC, net of debit credit notes, your breakup from 6B to 6H will have the net. If for any reason you have followed the gross ITC, which is that you have reported the gross ITC and the the credit reversals for the credit note issued by the vendor is reported as 4B1 as a permanent reversal, you will have to give a breakup of 6 from 6B to 6H on a gross basis and probably the reversal at 7. The challenge over here in this case would then be if you're going by the gross method of reporting, then the challenge that you will face over here is that your 8A is again a net ITC or a net number. So you will compare your 8A with 8B. The 8B will have the gross number, will not have that ITC. So probably to that extent, you will have a difference or a negative number at the end of table 8. I mean, not a number which comes on the face, but if you do a math out there, obviously you will show a figure which is you've claimed the ITC which is more than what is appearing in your table 8A, and there probably is a chance that you might end up getting a notice. Uh, uh, so therefore, I think logically now it seems that net reporting of ITC is the way forward, and I guess majority of the taxpayers and chartered accountants have been following that. So I don't foresee a challenge out there, but still, there have been instances where somebody has not been following, but now it seems that it is more advisable to start following the net ITC method. This has its own challenges as well. If you ask me, I've seen some litigations where the tax officers have, when you are a supplier and you have issued a credit note to the customer, and also again after the recent amendments, it requires that the recipient is, reversing the ITC to that extent. So if I've reported the net ITC, technically, you don't have a separate line item to show that reversals have happened, and that sometimes becomes a challenge when your recipient is not willing to give you any sort of a confirmation or a CA certificate for that matter. So we've seen that in the past people would want to report those reversals separately just to kind of identify, but now with the 2B reporting coming in, I don't see that that would really help, and therefore I think the net reporting at 4A5 level would be much advisable. Well, legally, I have my own reservations, but I still feel that that's how it is going to. That's how practically it will have to move forward because portal is immortal. We all know, and that's what we've been hearing since 2017. So ultimately, it's the portal who decides how the entire reporting and everything happens. So that's how we will have to proceed with it. Moving ahead at 4K and 4L, we have the transitional credit, which to be very frank are more or less redundant now. Then we have, 6KNL, and then 6M is the ITC, which I've availed based on ITC 0, 1, 2, 2A and all those forms. And if I've claimed any of those ITCs, then that has to get reported over here because this is an ITC which does not actually get added through your 3B. It happens through another form, but that credit does get added up to your electronic credit ledger. So therefore, the government is wanting you to kind of report what is that credit that you have claimed just as a part of your annual reporting. So that is something which will get reported over here, and therefore you will have a column at 6N and 6O finally, which will have the total of all the ITC that you have claimed in your GSTR 3B, and then the other ITC, which if at all you have claimed through some other forms like Tran 1, Tran 2 or ITC 0, 1, 2, 2A. So that's the summation of the total ITC that you have availed in the current financial year. And this is for this specific financial year. And against that, the government is now wanting you to show the reversals that you have made for the current financial year. So it includes your reversals under Rule 37, 37A, Rule 38, then 39, 42, 43. Again, 42, 43, we all know. Then, if at all I have reversed anything under Section 17.5. So now, with the reporting under the circular 170, typically what would happen is I would end up availing that ITC at 4A5 level, and then would also reverse that ITC as a permanent reversal in 4B1. So therefore, that reversal should get reported. If at all you have reversed something, that could get reported at 17.5 to kind of just give an reporting to the officer that look, I have reversed something under 17.5. Then any tran 1, tran 2 reversals, and then 7H is all other reversals. And this again is expansive. You can actually add number of line items over here, and they also allow you to put in some text, so you can actually inform them what is the reason for your reversal. So this is what you get report. As far as the FAQs and the clarifications are concerned, the government has also said that all those temporary reversals that you're going to do can get reported over here as a part of 7H, or maybe any other reversal that, or maybe even the permanent reversals that you want to report can get reported over here, because you don't intend to claim that. So probably it's a lapsed ITC which you have carried forward, and then you decided that this is a permanent reversal, or for that matter, temporary reversal. All of that could get reported over here at 7H. And again, because it's an expansive one, you can add those number of line items and can give to the best possible extent whatever granular reporting you want to give over here. We strongly recommend that this figure should not be a balancing figure or a single line item figure. The maximum possible breakup you can give over here is something you should exercise or avail that benefit. A simple reason is that it kind of helps you explain things to the officer at the time of adjudication. So that is something which one needs to be keep in mind. And then you have a total of ITC reversal, and then 7J is the net ITC available. This is very surprising. For one reason is that the government at 7J is only reducing the ITC from 6O. The 6O is basically the ITC of the current financial year. It's excluding the previous year ITC, which have excluded it from 6A1. So this is only the net ITC available for utilization, but that ITC pertains to the current financial year only and not to the previous financial year. So this is very surprising, and this has its implication on GSTR 9C as well, because the GSTR 9C column or table 12E, which is the ITC claimed in GSTR 9, gets auto-populated from 7J. So that ITC only relates to the current financial year, whereas the books of accounts and the other tables of 12A to 12D is typically going through from the books of accounts. So wherein obviously the books of accounts will have your previous financial year ATC as well. 12B will also have a number which was booked in the previous financial year but claimed in the current financial year. So at 12, at table 12 of GSTR 9C, we are looking at the books of accounts, ITC as per books of accounts, which includes the previous financial year's ITC. But the 12E figure, which comes from 7J, is not taking the previous year. So again, it leads to a reconciliation difference out there. Ideally, one would expect that either the 7J could have had an adding up of 6A1, or maybe have another column called 7J1, which would again add 7J with 6A1. So probably, it would kind of complete the entire circle, and we would have the correct ITC available for utilization. Because if you read, night ITC available for utilization, it's kind of restricting you to the only that ITC. So it's a very wrong way to typically summarize. And I am just hoping, fingers crossed, that tomorrow some officer at some remote location in the country should not kind of come up with notices, or even kind of take the taxpayer for a ride that, look, I'm going to compare the 7J. And we've seen sometimes the officers do get hell-bent even after these circulars and clarifications in place. So This is something which should, I mean, logically not have happened, but yeah, that's how it is for now. So typically, this is how it has to be reported. Now, again, coming back to the discussion, the idea again over here is that the government is expecting you to report only the current year's ITC in table 6B onwards and even table 7. So even if you have reversed any previous financial year's related ITC, a classic example would be that I have claimed some ITC in the previous financial year, which is reversed in the current 3B, and I have reported that in table 12 also. The government is not expecting you to report that ITC anywhere in the table 7 at all. Again, very surprising, but that's how it is. And if I don't report it, to be very frank, my number at 7J level is never going to tally with my GSTR 3B. So again, a second leg of reconciliation item would have to be maintained over here, because your net ITC available as per 7J plus the 6A1 will again not match with your GSTR 3B, because the GSTR 3B net ITC would also have a reversal for the previous financial year. तो वो आपको एक separate line item रखना पड़ेगा to kind of explain to the officer. Uh, I mean, I don't know. It's kind of challenging how one is going to really kind of explain. Uh, and sometimes I feel that this entire reporting, while it's a very good intention that the reporting is purely for the current financial year, but somewhere if we could have a breakup, like if the government thought of having a breakup at 6A1 level, I don't know where was an issue of not having a separate line item at maybe 7I or 7J level somewhere, of giving an option to the taxpayer to report the reversal. So at least the reversals of 4B 1 and 2 would also somewhere, after adding up, would at least could have matched with the GSTR 3B as well. I mean, it's very surprising that that was not thought out, or I mean, it's not coming out very clearly from the FAQs also why that has not been addressed. But I mean, that's what it is for now, and that is what the government is expecting, and this is what has to be reported. And then we come to the table 8, which is the reconciliation of the ITC which is appearing in 2B. Now, frankly, if you ask me, out of all the amendments that have happened, I think this is the only amendment which has happened and which has hit the bullseye. We've seen in the previous financial years that 8A would get auto-populated from 6A. Again, this would obviously never match with your 2A. Sometimes we've seen that the breakup of the 8A invoices never matched with the 2A. It never matched, or in majority of the cases, it never matched. Even the 8A figure coming from the 2A did not match with the breakup Excel sheet that they would provide earlier. Then when it got converted to 2B, again, last year they restricted to the 2B of that specific financial year only. So the 2B of 23-24 was the summation of 8A. It did not consider the transactions of the previous financial year which were claimed in the current financial year, though it appeared in the previous years 2B, or even the current, I mean, the 23-24 ITC which got carried forward and claimed in 24-25 because it appeared in the 2B of 24-25, could not typically get reported over here in 8C. So this itself also, caused a lot of challenges. And therefore, I think the government very well thought out of this, and they said that, look, we want to give you a summation of all the current year transactions which have come to our database through the suppliers, GSTR1, IFF, etc. And I'm going to fetch all of that data from the GSTR2B of April 25 till the ones which have got filed till say 30th November 2025, which was that time period. And in between this entire period, any transaction which is dated 24-25 and has got reported by the supplier in his GSTR1 which has been filed, and obviously that comes in your 2B as well. I will bring a summation of that and report it at 2B. So this is like, this is the Bible now. This is it. इसके beyond आपका कोई भी ITC हो ही नहीं सकता है for this financial year. So this is a very good change which has happened. I mean, not in terms of the format, but the backend data which they have pulled out. So this again typically will not have transactions of financial year 23-24 which got reported in your GSTR 2B of 24-25. So वो transactions इसमें से exclude हो रहे हैं. They are only again looking at financial year 24-25 transaction. अगर वो कोई भी 2B में रिपोर्ट हो गया, चाहे वो 24-25 के फाइनेंशियल में हो या 25-26 में हो, all of that will get pulled up and will come over here as a part of 8A. And they have also provided an Excel sheet, the base of that Excel sheet, which you will be able to reconcile if you download that Excel sheet, or if you're using any softwares, those softwares will pull up that data, right? So after that, now you are going to compare it with 6B only. Now in the previous financial years, this would compare with 6B and 6H. Again, we know that the circular 170 required, first claim, then reversal, then a reclaim. So typically those transactions, a transaction would get added up at 8B twice. It's a very much expected change and a well anticipated change that finally the government brought this change. So now they have put it at only 6B only. So those reclaim transactions don't appear over here. So typically what I would do is I would only compare it with my claim which has happened for the first time only. Out of that, so basically 8A and 8B would be auto populated from what has been reported. Then I would come to 8C. So out of 8A, again, I would just want to take a pause here and try and explain the logic with which we have been working. And I think there has been a very different interpretation as far as, this reporting of table 8 is concerned. A lot of times people look at saying that, look, my 8C has to match with whatever I have claimed in the subsequent financial year. While this is partly right, I think the approach with which we are going ahead, and which could also be, and which is again, is getting clarified year after year with the amendments in the format and the data that is coming. The government just wants you to give a breakup of the ITC that or the number that is coming from 8A. So even in the past, the government always said that, look, I'm giving you a number which is in 8A. Out of that, I'm assuming that whatever you have claimed in your GSTR 3B is coming at 8B level. जो बच गया बैलेंस ट्रांजैक्शन है उसमें मुझे 3 ही ब्रेकअप चाहिए आपके पास से. क्या आपने उसको नेक्स्ट ईयर में क्लेम किया है, या वो अनअवेल्ड है, या वो इनएलिजिबल है. 8C में गया तो गवर्नमेंट knows that okay, this much ITC I have to carry forward and allow it to the taxpayer in the next financial year. And 8E and F is something which the taxpayer is not going to avail, and typically those are the ITC which will lapse. So that's the only thing that the government wanted us to report even in the past. And this is what consistently we have been following. So if a transaction never appeared in our 8A, even if that was claimed in the next year, or if it was ineligible, or it was unclaimed for that matter, we never reported it in 8C or 8E or F in the past. And therefore, one has to again, with this change again happening in the format or the data set of 8A, this position again gets clarified that now the government is very clear that, look, GSTR 2B ही आपका पूरा बकेट है, इसके बाहर आपका कोई ITC नहीं है. इस ITC में से अगर आपने कुछ लिया है तो वो 8B में आएगा. क्यों? और वो इसी फाइनेंशियल ईयर का होगा, क्योंकि आपने प्रीवियस फाइनेंशियल ईयर के ट्रांजैक्शंस ऑलरेडी 6A1 में निकाल दिए हैं. सो 6B में तो आपके करंट फाइनेंशियल ईयर के ट्रांजैक्शंस होंगे, तो वो आपने एक्सक्लूड कर दिए. अब जो बैलेंस बच गया है, kindly explain whether you have claimed it in the next financial year. If yes, report it in 8C. If it's unavailed for any reason, report it at 8E level. And if it is ineligible and therefore you have not availed it, report it at 8F level. Now, let me just also kind of correlate this with table 6. If I'm following circular 170, typically the circular says that all ITC which is appearing in 2B has to get reported at 4A5. And there and from that, if something is ineligible because of 17.5, or you specifically don't want to avail it for any reason, you have to report it at 4B1 level as a permanent reversal. Now, if I typically do that, then I will also have to look at reporting that ITC, which is an ineligible ITC, which is I've claimed and reversed in this year, would also have to get reported at 6B level, right? Because I'm going to match it with my GSTR 3B. And I would also report it at 17.5, reporting in table 7, or maybe in other reversals, anyone, so 7H or something of that sort. So typically now, even if that ITC has been availed by me and reversed, I mean, availed and reversed by me, this gets auto, or rather it gets reported at 6B level. And therefore, typically it comes at 8B level also, right? So therefore, logically speaking, I would frankly see that nothing should come in 8E and F unless it is something which you have never, I mean, it's not your transaction itself and you have decided not to report it. But otherwise, logically speaking, if it's a transaction which is pertaining to me, then typically everything gets reported. So 8E और F में अभी कुछ होने का chance बहुत कम है, because even your unavailed ITC which you want to lapse intentionally, or it's an ineligible ITC, typically would get reported at 6B and therefore will become part of 8B also. So therefore, very few transactions would appear. Or if you are not following the circular 170 reporting altogether, and which is also legally valid, we personally in our office are also not following that reporting in quite a few of our clients. And therefore, in those cases, it's possible for us to report it at 8E and 8F. So if you are following the circular, then probably we now feel that there could be a chance of notices now coming saying that, look, you have availed the entire ITC, and this has happened in the past also. Some IT reports or some data reports were run, and based on certain specific HSN codes, notices were issued that, look, so and so vendor has so and so HSN code, and that vendor has reported a supply in his GSTR1 to you, and we feel that this is the risky HSN or probable HSN which falls under 17.5H or 17.5 rather, and therefore this ITC has to be ineligible to you, and therefore notices have come. So probably those kind of notices will still continue further, because now I am following that reporting and everything is getting claimed by me. Though I have reversed it, but yes, we will have to again explain that, look, I have reversed it, and therefore it is advisable that you report things appropriately at 17.5 level, or if you're reporting under 17H, please specifically identify that those number of transactions which you know are ineligible, and please give a breakup of that and mention that this is a permanent reversal made under 17.5, so that the officer is really able to correlate the numbers, and your life is to a lot extent sorted out if the numbers match, and the officer is able to drop the matter at a summary level only, and you don't have to really dig into a transactional level data and give those kind of submissions to the officer. So again, a very important part that one will have to be very mindful of. Moving ahead, then we have an 8G, which is typically of the IGST that I have paid on the import of goods. Obviously, SEZ transactions, any movement from the SEZ to the DT is also an import, so that will also get added up over here. Out of this, if I have availed anything in the current financial year, I will report it at 8H. And then we have a new line item 8H1, which is that if I have availed any ITC in the next financial year. Uh, Again, this says next financial year. So I just want to put in a point over here that the time limit for claiming ITC does not apply to the import of goods. So, but the words over here says that the next financial year. So again, financial year or financial years is a dispute. But again, I mean, this does not really kind of restrict your ITC. But yes, even if you have claimed it in any of the subsequent financial years, this is something which should get reported over here at 8H1. And then the balance is a difference which probably is available but you have not availed, and which would get reported at 8J level. So in case you have decided not to avail any specific ITC on the import of goods, that should get reported over here at 7J. And then finally the total of whatever is the total ITC that you want to get lapsed, will be the total of 8E, F and J. So typically this is what the government knows that itna ITC मुझे नहीं देना है. So balance is the only ITC which should have got claimed by you. And that kind of a data reconciliation will happen at the government, and then you'll see a lot of notices coming through in case there are any differences as far as this reporting is concerned. So moving ahead, part 4, which is on the tax paid as declared in the returns filed. So this will again have, again, this is very similar to the previous year's reporting. Only difference is they have added a new column at the extreme right, which is the difference between the tax payable and the tax paid over here. So this is what it is. And also, I'm sure a lot of you all know that negative output liability reporting has been allowed from December 24 onwards. So in case you have reported any negative liability in any of the 3B, typically your table column 2 of table 9 should be the net of that. So probably in month 1, say April, I have reported 100, but in May I have reported negative 20. So my net liability would be 80, and that would also be coming from your table 4, a total of table 4. So that 80 should again get reported over here. And then logically, your tax paid and everything would get automatically adjusted to that extent. Going ahead, again, table 10, 11 have got a very clarificatory amendment over here in terms of the the wordings. Earlier it was only through debit notes and amendments. Now they have also added the word invoices over here. So if I have reported any tax in the 3B of the next financial year, by way of any invoice or debit notes, or I've made some amendments and paid some additional tax, that should get reported at 10. 11 is something where you're going to reduce something in the next financial year. And 12 and 13 is something where you have reversed some ITC or availed some ITC pertaining to current financial year, which is reported in the next financial year 3B. So again, reporting perspective, there's not much change that is expected, but yeah, from the wordings perspective, there are certain changes which have happened. Then we have a table 14. Table 14 with regards to any tax which was payable based on 10 and 11, and whether anything has been paid or not. So that is something which you'll have to report, and a difference of that. And then 15 has an information of the refunds. 16 has some other details, against a bit optional over here. 17 has HSN summary of the outward, which is mandatory. 18 is inward HSN summary, which is optional. No changes over here. And again, the late fee payable and paid, which gets auto-populated, and which is something which has to be paid. So that is all as far as your GSTR 9 is concerned. 9C, not much of a changes except for one that, earlier we had an option of not or summarizing everything in table 4 over there. So in the others category, now that option has been removed. So we will have to give a breakup of your revenue reconciliations for each of the parameters made. It could be the credit notes, unbilled revenue, forex adjustments, or maybe even the valuation related adjustments. So all those will have to be frankly reported now. You'll have to give that, and I don't foresee any challenge in doing that. Even earlier, taxpayers very well had the breakup, but yeah, a lot of them did avail that, exercise that benefit. So this is what it is. Now coming to the FAQs, certain points related which were clarified in the FAQ. One is that 9(9)C would get enabled only if you filed all the GSTR 1 and 3B. So if a taxpayer has not filed the applicable 1 and 3B for any of the tax period of 24-25, the GSTR 9(9)C will not get enabled for you. Data will get auto-populated in your GSTR 9 based on 1, 1A, IFF, 3B, and 2B. So like I've discussed, the respective tables from 4 to 8, 9 will all get auto-populated based on that. Again, a lot of this is obviously editable. So again, the taxpayer has an option to edit whatever he wants to edit. 8A, again, like I mentioned, is coming from 2B from April of financial year 24-25 as well as 25-26. but it will only filter out the transactions pertaining to 24-25 and will come in. And one more important, very subtle thought. Uh, uh, they have also mentioned that the late fee will also be now be applicable on GSTR 9C. So in a way, the earlier relaxation which had come in, and a lot of places we've seen that whenever GSTR 9C was filed late, typically the central authorities were, during the audits were actually issuing show cause notices or rather, giving the audit observation stating that a 50,000 penalty would apply under 125 for, not complying with those provisions. But in the last budget, when that relaxation had come in terms of the late fee, so which kind of clarified also that penalty would not apply. Again, the FAQs have also mentioned that now 9C will also have a late fee applicable. So indirectly kind of clarifying that the issue of non-applicability of penalty or applicability of penalty now kind of stands resolved, and therefore we could now see that no such notices for levying of penalty for late filing would come in. I mean, obviously, non-filing could still trigger a penal provision, but at least the late filing part will typically get addressed as far as your late fee is applicable. I hope we are clear through this. Is there anybody wants to discuss or needs any clarification? Otherwise, then I would want to go to certain specific cases where I would like to really discuss on the probable reporting points. So, Forum, do you want to take any questions right now, or should we proceed? Because I think a lot of those concerns will also get addressed at the case study level. Maybe then we could take up some questions.
I think you are right, Nihar. We can use that approach. Let us
Sure.
cover those case studies. And
Sure.
then if there are any further questions, we can request participants to post.
Perfect. So we've just kind of put out 6 or 7 cases out here, trying to bring in different permutation combination of how the reporting would happen. I just want to put out a disclaimer over here. So we have put out one typical reporting which has been suggested by the FAQs which were issued earlier in the month of October, and there was certain a very small FAQ which had come on the 4th of December. So we've kind of identified what exactly is the reporting that they have suggested, and uh, in comparison to that, we have also put out our firm position as far as the reporting is concerned. I would just want to put out a disclaimer that the reportings that we are following are not 100% correct. But again, I think we've taken a holistic view from 2, 3 perspective. One, that the entire approach of this reporting has been that we don't want to come at a situation where my gross ITC availed in 3B does not match with the table 6 of GSTR 9, and my gross ITC reversed in 4B is also not matching with my 7. So we have just taken a position that tomorrow I don't want to have an additional set of reconciliation that what is there in 3B is not there in 9, etc. So we have made it a point that whatever has been reported in my GSTR 3B at 4A or 4B, all of that summation has to somewhere or the other fit into my GSTR 9. So we have as a firm taken a position that we will not exclude any sort of a transaction given the rigid format or given the number of tables that are available. We'll try and incorporate all of that into this, so and try to have the maximum possible reporting so that tomorrow I don't have to really run and keep one more set of reconciliation of what is the difference between GSTR 3B and GSTR 9 reporting as far as the ITC is concerned. So that's the conscious call with which we have proceeded. And second, frankly speaking, Circular 170 reporting, I personally have very strong views of why that is legally not tenable or has some very strong legal issues. And therefore, some of those reporting positions that we have taken are kind of just the opposite of what the rule, I mean the Circular 170 and the FAQs have said. So with this specific and small disclaimer, I'm just proceeding with the case studies that we have collated, and I would discuss, how the typical reportings have happened. First, a very plain vanilla case of a financial year 24-25 ITC claimed in that same financial year, but I have first temporarily claimed it, reversed it in that specific month following the circular, and then reclaimed it at a subsequent month whenever maybe I've received the goods or I've booked the invoice. Now, what does the FAQ say? It says that when you have done the first availment, or the original claim, which is the temporary claim that you have made, that typically should get reported at 6B. The reversal has to get reported at 7H because it was a temporary reversal under 4B2. And then the reclaim which you have made, which was your actual permanent claim, should typically get reported at 6H. Now, this is what the circular or the FAQs are clarifying. Uh, what position we have reported is a bit different. What we are saying is our original claim, which was a temporary claim, is at the 6H level, and the actual claim, which is my permanent claim, which is my actual availment of ITC, is at 6B level. The reason behind this is that one, that a lot of our clients are actually following the position that, look, we will give a breakup of input and capital goods. When I'm doing a temporary claim, the first claim based on the 2B, typically our clients don't have any sort of a visibility of the transaction level breakup of what is there in that. And I'm sure majority of the clients, or even chartered accountants do that, is that the 4A figure is auto populated and we stick to it. In addition to that, if I'm availing any ITC, which is a reclaim ITC, then I would typically add it as a 4A5. So वो तो number मेरा fix ही है, and I typically don't have a visibility of a breakup of that transaction. वो कौन सा invoice है, क्या है. अगर वो मुझे आज 6B में report करना पड़ेगा, so I will have to actually do a summation. So एक तो मेरा purchase register है जिसको मैं breakup करूंगा, क्या मैंने claim किया है, क्या मैंने current year में claim किया, next year में claim किया, what is eligible, what is unclaimed, etc. Then I will have to also have a second set of reconciliation, which is based on the 6B. So my first claim, which was a temporary claim, will have to get reported over there. So therefore, I think as a practical way out, we found that, look, my visibility in terms of the data is only when my client is doing that actual claim. He's not able to really provide me that in the month of April when the temporary claim was made, whether it was input service or capital goods. So therefore, consciously we have taken a view that my actual availment, which is my permanent availment, will be what for which I will be able to give a breakup of 6B and 6H. Second reason for going for this reporting is also that we have a strong view that reporting of ITC, temporary claim and reversal, is not the actual claim, and we all agree to that, because typically I cannot avail something in the first place because my 16(2) conditions are not met with. So just because I have availed something and reversed something, I will not have a tax liability for sure. But in the first place, can I really avail it? And I don't want to get into the discussion of that legal aspect, but yes, we all know that that circular has some legal challenges. So again, even going by that logic, I don't want to really say that, look, my first temporary claim was my availment, because typically my availment will only be the permanent one which I have actually done, and that also has to have some reconciliation with my books of accounts, etc. also, because those are all transactions which I would have claimed in the next financial year if at all. तो वो मेरे को कहीं ना कहीं पे 8C में भी रिपोर्ट करना होगा, मेरे लेजर्स के साथ भी टैली करना पड़ेगा. So that visibility will only come if I have kind of reported it. So therefore, only those claims which are actually claimed permanently, we are reporting at 6B level, and all the other temporary claims we are reporting at 6H. So again, my 6H would be the temporary claims plus genuinely reclaims under Rule 37, Rule 42, etc. Then in table 8, again, how does this flow? It will get included in 8B in both the cases, but in as per the FAQ, this would get included in 8B because of the first claim. In our case, it would happen because of the reclaim. And at 9C, again, the position is same. This will get reported at 12A and would also come in 12E, and therefore there will not be any reconciliation. So I guess so far this is the plain vanilla case, and I'm sure there should not be any confusion out here. Is there anything that I mean, if there's any question over here, maybe we could just stop a bit and take up if there's any question.
Yeah, participants can post their questions in chat box if there are. Not on this, Nihar, so we can go ahead for now. There is one question in chat box, I think, which is not related to this case. So we can take up when we
I
take
think
up
this gets resolved, which is aggregate of 2B and 8A. I think I've already resolved, and which is also part. So if 2B will have your transactions for 23, 24 also, but 8A will not have that. So that's typically one answer. And there's a case for this as well. I think that will get addressed at a later point. Quickly, we'll move to the next case, which is case 2. It's a ITC of 24-25. It has been booked in 24-25, but claimed in the financial year 25-26. So typically the FAQ says that, look, if you have, and again, it is appearing in the GSTR 2B also of 25-26. So the FAQ says that this will not get reported anywhere in table 6. At table 8 level, it says that you will, because it has appeared in GSTR 2B of 25-26, it will come in 8A. And because I have never claimed it in the entire financial year 24-25, this will become part of 8C. And you will also have to report it at table 13 because that's an ITC you have claimed in the next financial year. एंड 9C में ये आपके 12C में आएगा क्योंकि आपने बुक करंट ईयर में कर दिया, आप नेक्स्ट ईयर में क्लेम कर रहे हो, तो 12A का पार्ट होगा और फिर 12C में आप उसको दिखाओगे कि ITC booked in current year but claimed in next year. So ये reporting. So our position is also very much the same. We don't have any deviation as far as this position is concerned. Right? I'll move to the next part, the case study 3. Now, this is something where we have slight different view. So this is again similar to case 2, but the booking and claim, everything has happened in 25-26. So this transaction has not got booked in the books of accounts itself in 24-25. So table 6, again, the FAQ also says no reporting. We also say no reporting. It's logically right. This will come in table 8C. Again, we are of the same view. Table 13, we are following two views. One, we also agree that this should get reported in table 13. At some places, we've seen that our clients don't have the data visibility of what has been claimed in the next financial year because of certain volume challenges or some system challenges, and therefore at some places we have taken a view that if the ITC is booked in my books of accounts in current financial year and has been claimed in the subsequent financial year for which I have a visibility in terms of my PR and my ledgers, tax ledgers, etc., I would report it in table 13. If something has been booked altogether in the next financial year, I would not report it in table 13. And therefore, my table 13 of GSTR 9 and my 12C would always match. If I go by the reporting which has been suggested in the FAQ, then what would happen is your table 13 will have the ITC which is booked in the next financial year, but your table 12C of GSTR 9C will not have that figure क्योंकि वो next financial year में हुआ, वो current financial year में book नहीं हुआ है. So to that extent there will be a difference and you will have to keep a record. Well, practically, we've not seen, department really coming up with any questions or queries related to table 12 of GSTR 9C. And therefore, we are of the view that even if you're reporting it in table 13, you should be fine because, frankly, the government has never checked table 12 or 9C. 9C में सिर्फ टेबल 4 जो है रेवेन्यू का रिकंसिलेशन उसी पे क्वेरीज आती है और डिस्कशन होता है. एंड सो देयरफॉर even if your 12C of GSTR 9C and your table 13 of GSTR 9 are not matching, I think it should not be a problem. And if you're maintaining a reconciliation, you're good to go ahead. So I think so far that is okay, I feel. We'll move to the next case study, which is a bit more interesting. So this is an ITC of 24-25. Now we are but booked and claimed in 25-26. And again, even in 24-25, it appeared in the GSTR 2B. And therefore, there was a temporary claim and reversal in 24-25. So it was a current year transaction. It appeared in 2B in current year only. And therefore, by following the circular, I have availed it and reversed it, the temporary availment and reversal. But the actual reclaim or the actual claim happened in 25-26 only, क्योंकि मेरा तो invoice तभी book हुआ था. Say a March transaction, goods received in billed by the customer on 31st March, the vendor, but I received it in say 4th of April or 5th of April, तो मैं तो April 25 में उसका ITC claim करूंगा. So what does the FAQ say? FAQ says that look, the temporary claim will appear in the 6B. The temporary reversal in the 24-25 will appear in 7H, and the reclaim which you have done in the subsequent financial year would appear in 6A1 of next year, 25-26. So whenever you file the 9-9C, because you have reported it at 6B, this would also get added up at 8B only, क्योंकि वो उस टेबल 8 के हिसाब से तो आपका इस बार क्लेम हो गया, तो अब ये 8C में नहीं आएगा. हालांकि आपने इसको क्लेम एक्चुअल में नेक्स्ट ईयर में ही किया हुआ है, but this would not come or be a part of 8C. So typically आपका ledger books of accounts will say that ITC has been claimed in next financial year, but that would not match with your 8C, frankly, or for that matter. It says that you will have to report it at table 13. GSTR 9C, they've not kind of given any clarity, but typically in one of the FAQs, they have mentioned that GSTR 9C will follow the books of accounts. So logically, if that is the case, if it's booked and claimed in 25-26 only, there would not be any reporting altogether in the table 12 of GSTR 9C. Now, what is the reporting that we are following? So like I mentioned in the case study 1, my temporary claim we are reporting at 6H, because I am saying that look, this is not my actual claim, I'm only reporting because of that circular. The temporary reversal is getting reported at 7H, and we are clearly mentioning that reversal as per circular so and so 170. The reclaim in 25-26, I think that will go in 6A1, no dispute on that. Only terms and condition is that hopefully the government does not change the reporting pattern or the format hopefully next year. Because we are not reporting it in 6B, we are of the view that, and therefore as a consequence of that, this should come in 8C as far as our reporting is concerned. Table 13, yes, no, is very similar to the previous answer that I've given. While we feel that reporting at table 13 should also not be a challenge, but in case there's a visibility issue or you want to match your 12C with GSTR, I mean table 13, then probably you might not want to report it at table 13. And again, 9C, there will not be any reporting. So that's typically how we are seeing. So this is a bit stark difference as to what the way we are reporting, because we are not following the 6B reporting for this. And therefore, the table 8C, we are saying that this is an ITC which is carried forward and we want to claim it in the next financial year. And one more reason, why we feel that this is more logical also is because, see, next year when you report something at 6A1, that 6A1 should also match with your 8C. अगर आप डिपार्टमेंट के लॉजिक से जाओगे ना, तो नेक्स्ट ईयर में आप 6A1 में तो दिखाओगे, बट वो 6A1 आपके 8C के साथ मैच नहीं होगा. सो आप कैरी फॉरवर्ड नहीं कर रहे हो एज पर टेबल 8, बट आप नेक्स्ट ईयर में उसको क्लेम कर रहे हो. अगेन दैट इज अ रिक्लेम फिगर एज पर द FAQ एंड द सर्क्यूलर, बट स्टिल समवेयर, आई मीन अगेन वो 6A का आपको दो ब्रेकअप देना पड़ेगा, वन दैट हैज बीन क्लेम फॉर द फर्स्ट टाइम एंड वन विच इज अ रिक्लेम्ड फिगर. So I don't know. I mean, this is kind of I mean, we just thought that ये बहुत ज़्यादा reconciliations और breakup workings बनाने के लिए या maintain करने के लिए force करेगा. So therefore we thought that look, this looks more logical. इसको अगर मैंने 8C और 6A1 को to the best extent match करने का try किया, so nothing doing. Next year वो मेरा carry forward ऐसे ही allow हो जाएगा. मेरे को शायद उसमें ज़्यादा उसको फिर further रिकोज और उसकी वर्किंग्स वगैरह बनाने की जरूरत नहीं पड़ेगी. सो दैट इज वेयर दैट एंटायर लॉजिक ऑफ लुकिंग एट अ मल्टी ईयर assessment and an audit and trying to ensure that at the on the face of it, if something is getting reconciled, it should be a much better position for reporting. So therefore we are kind of deviating from this, and last year for all these kind of reclaims or other temporary claims, we had reported at 6M. Because it said it at that point in time, it said that any other ITC claim. So we reported it over there. Now this year they have amended it and said that look, it has to be only specific ITCs which you have claimed. So again, that 6M का option निकल जाता है हमारे लिए. They mentioned that it was a clarificatory amendment, that this was the intention. But however, now because it's a very specific line item, we decided to go by the 6H. Again, it's a bit deviation or a wrong reporting. It's not a reclaim, but be as it may be. I mean, that's how we've been following. Next is the case 5. It's an ITC of financial year 23-24 claimed in 24-25. So again, previous year transaction claimed in 24-25 and 24-25 के ही 2B में दिख रहा है. So last year के 2B में दिख ही नहीं रहा था. So obviously आपने claim नहीं किया है. So last year के 23-24 के table 13 में जाएगा. Because it was booked in 23-24. So department is also of the view के 13 में जाएगा and we are also of that view. Current financial year में very interestingly, they say that look, previous financial year transactions have to get reported at 6A1 only. So your original claim and the reversal, दोनों का reporting करने का जरूरत नहीं है. Just report it once and you report it at 6A1 only, and therefore you're done with it. However, like I said, we don't want to look at a situation where my gross ITC and gross reversal are not matching with the 3B. So therefore, intentionally, we decided that, look, we will still go ahead and report it. And therefore, we are sticking to that our temporary claim, even if it is pertaining to financial year 23-24 invoice, will get reported at 6H. Temporary reversal, we will put at 7H. We have decided to give a breakup of that between the two financial years, like 23-24 and 24-25, in the clients where we have a visibility in terms of the data. Our actual claim, which is typically the reclaim, gets reported at 6A1. So there, we are aligned with the FAQ. Again, table 8 and 13, obviously no reporting. However, please be mindful of the fact that ये जो transaction है, जो 24-25 के 2B में आया था, ये लास्ट ईयर के भी टेबल 8 में कभी नहीं रिपोर्ट हुआ है, क्योंकि लास्ट ईयर के 8 में ये ट्रांजैक्शन था नहीं. करंट ईयर के भी 8 में ये ट्रांजैक्शन नहीं आएगा, क्योंकि 23-24. सो ये वो काइंड ऑफ ट्रांजैक्शंस है जो एक्चुअली में लावारिस पड़े हैं ना. उसको 9 में आई मीन प्रीवियस ईयर के टेबल 8 में जगह मिली, ना करंट ईयर के 8 में जगह मिली. And frankly speaking, this is going to be a challenge, as far as the, maybe year after year carry forward and everything. जब वो adjudicate होगा या वो होगा, तो typically on the face of it, this could be a challenge. While, I mean, if somebody has to really reconcile it, 2B में मिल जाएगा, तो things are sorted out. But yes, on the face of it, this seems to be a bit of a challenge. And again, as far as your 9C is concerned, this will get reported in 12B. But yes, like I mentioned earlier, this does not form part of 7J because it's a previous year ITC, and therefore it will not get included in 12E. And in the FAQ, they have very well said that yes, this will not match, and therefore you may give a reconciliation difference for that. So just keep your fingers crossed that इस रिको डिफरेंस के वजह से कल उठ के नोटिस ऑटो नोटिस ना at least, or at least the officer should not take a taxpayer for a ride. So yes, to that extent, there will be a RICO difference. Then is the case study 6. In this, the only variation is that this is booked and claimed in the next financial year, which is 24-25. So again, as far as your FAQs are concerned, it says that it would get reported in table 13. We are also of the same view. Table 8, like I mentioned earlier, it would not get reported because it never appeared in your table 8 earlier. Original claim, the temporary claim, temporary reversal and reclaim position is very much similar to case study 5 over here. And table 8, 13 also similar position. 8C also, 8C, 9C, only difference is now this will become part of your 12A and not 12B, because previous case, because it was booked in the previous financial year in a books of accounts, this would get reported at 12B level. Here now, because it is booked in the current financial year only, and because the FAQ also says that you will have to follow your accounting methodology, so this will get reported at 12A level. And then obviously this will again lead to a reconciliation difference. But yes, we will have to explain that this is a transaction of previous financial year and which has also been reported at 6A1. And I think with that reconciliation item, things should get, to that extent, it should kind of answer. but just hope that no more notices should come in for this specific thing. Any questions as far as these 6 case studies are concerned? We kind of try to cover the 3 years. Are there any questions in the chat box? No, I don't think so.
No,
I don't know. I mean, either
no, yeah,
I have tried to. There is one.
Yeah, it just came one.
Okay, so the question is ITC of financial year 24-25 reflected in 25-26 2B is claimed and reversed accordingly. So the net ITC is reported in 8C. I am mentioned ITC claim table 13 and 8B and ITC reverse in table 12. So can we have this gentleman unmute and maybe if you could just explain your query once again?
Sure, 1 second. Hello?
Hello.
Yeah.
Yeah. So you can hear me?
Yeah. Go ahead, please.
So my question was, ITC was reflected in financial year 25-26, which pertains to the 24-25. So I have claimed ITC, but partially it was not allowed to claim.
So you are typically talking about my case 3, if I'm not wrong, because
Yes, but I have to reverse also. So like 100 rupees 100 is total ITC, but
correct.
I have to allow to claim only 80 rupees. So 20 rupees I have to reverse it because of it is a food ITC and all. So so my question is like in table 8C I have to mention 80 rupees or 100 rupees.
8C you will ideally report 80 rupees. I mean, if you ask me frankly, you will have to report 80 rupees because that's what typically you have claimed.
Yeah, but so after that I will get 20 rupees excess balance as per the table 8.
Correct.
I'm mentioning in table 1300 rupees, in table 12 80 rupees. Sorry, table 12 in 20 rupees.
Agreed. So if you're reporting that way, if you're reporting the gross one, then even your 8C will have your 100 rupee and your 6A1 of next year will also have 100 rupees. So that could be one way of looking at it where you're reporting everything at gross level only.
Okay.
Yes. Or if you have reported directly 80 rupees as your net ITC in 4A5 of next year, then you will have to go by the net ITC where you will report 80 in your 8C, 80 in your 6A1 of next year, and you may look at reporting 120 or just 80 in your table 13, or maybe 113 and 12 at 80. I mean, any one of that could logically still be okay.
Okay. Thank you.
Yeah. So yeah, I mean, just one last one. I think this is more on the table 8A front. So we've got some queries, and personally, we've also seen that our 8A does not match with the Excel in some of the cases, and for which even the department has clarified that probably your 8A Excel sheet will have your RCM transactions, but it will not get added up at the 8A. So the breakup Excel working will have those transactions, but वो 8A के summation में add नहीं होता है, तो आपको वो exclude कर देना है. All the transaction where the place of supply is outside the registered state of the taxpayer, तो वो आपके 8A की Excel breakup में आएगा, क्योंकि वो financial year आई मीन इन टैक्स इनवॉइस की डेट पकड़ के ही वो रिपोर्ट जनरेट होता है. इट डज नॉट टेक अप पीओएस एंड ऑल ऑफ दैट. आरसीएम वगैरह वो नहीं दिखता है, वो सिर्फ इनवॉइस की डेट लेके वो रिपोर्ट जनरेट हुई है. So it will have the place of supply related, other state place of supply related transaction will be there in the Excel sheet. You will have to exclude it when you want to try and add up to come at arrive at table 8 ka total. Then if any invoice date has been amended, so if say typically vendor has reported invoice of say March 25 and then subsequently amended the date to say April 25. So that transaction will appear in your B2B as March and B2BA as April. March will have ITC eligible and April will show that ITC is not eligible. So you'll have to exclude those transactions and then try and do a submission. तो शायद आपका 80 के साथ match होएगा. Similarly, if an GST IN has been amended, like somebody has reported your GSTI and then subsequently changed to other GSTI, तो वो आपके B2B और B2BA दोनों में दिखेगा. तो वो भी आपको exclude कर देना है. So typically, if you do that, your 8A should match. Earlier, they had mentioned that 8A will be a real-time auto population. Again, now, when we are discussing as of now, auto population का कोई relevance नहीं है क्योंकि 30th November was the last date. So now we don't expect any sort of additional auto population there. However, we have seen instances where some transactions are appearing in my 2B, but for some technical reasons are not appearing in my 8A. And recently, just I think yesterday or day before yesterday, we've seen instances where, when I had filled the 8A, the draft showed the number very much in the 8A, but after filing, the filed PDF had, 8A reported as zero for some reason. So that was also, some technical issue which has just cropped up very recently. And in one of our instances, unfortunately, the 8A figure is coming as zero in spite of, the ITC being into crores. And the Excel file is not also getting downloaded. We've raised that ticket. This issue came up in November itself. Then they said that 30th November 8A will be reprocessed. Probably, it will get regenerated for you. You wait till then. But as on date, we are facing that challenge and it's not there. So probably in that case, only option left with us is that we do a manual reconciliation and at least upload it as a part of attachment in GSTR 9C. Because apart from that, there seems to be no other option to report. So maybe at least जो हमारा correct reporting है, या एटलीस्ट हमको जो विजिबिलिटी हम उस बेसिस पे 8C एटलीस्ट रिपोर्ट कर देंगे सो दैट वी नो व्हाट इज आवर claim in the next year or what we want to carry forward. And that's what our plan of action is. So moving ahead, what should the CAs be ready for? I think after all of that discussion, couple of things, are no brainer at all. First is, we'll have to really be ready with multi-dimensional RICO working. So now earlier we used to just reconcile 2A, 2B or whatever, your books of accounts, etc. But now if you are following the FAQs and the reporting patterns in spirit, then you'll also have to have more, reconciliation items like the gross reversal as per 3B, which has 23, 24, but is not going to get reported in GSTR 9. So those kind of new RICO reporting items, reconciliation workings will have to be prepared. Always advisable to have it prepared immediately as of now before filing the 9.9C or at least immediately after that, because we all know as the time lapses, probably all of this data crunching becomes difficult, specifically when our staff or team members keep changing. A very important thing is mass level tech adoption. I think we as chartered accountants, should really try and invest a lot of our own time and money and our team's time into, really good level of tech adoption, some automations if possible based on the market tools available, or maybe training the teams for Excel and other tools which can help the data crunching, and also start advocating, the clients to really look at maintaining their Tally, Zoho, or other ERPs to the best possible extent. Because see, today all these ERPs are very well, capable of giving the right amount of report. But it's just that we will have to tell our clients very strictly that look, you need to start doing your accounting in that fashion and start implementing. I've seen some of the clients still working on Tally 4, 5 because they just don't want to upgrade. So it's time that we put our foot down and tell them that look, you will have to upgrade to the latest version of Tally or any other softwares, and also ensure that the accounting entries are happening in that fashion. So the tech itself will be able to give you the right level of data and you'll be able to do all these reconciliations and number crunching in a much more automated way. Otherwise, we all know how stressful and struggling this is. And then probably you'll have to also make out some scenarios or following the instructions. In case you follow, तो आपको क्या problem होने वाली है अगर आप नहीं follow कर रहे हो FAQ को and you are going by any separate reporting, like how I mentioned the kind of reportings that we do. Probably you'll have to kind of map those scenarios and inform the client if at all the client is somebody who would appreciate that. And yes, let's embrace ourselves and be ready with the notices with the new data sets, because now the older problems have got solved, but as you rightly see, newer problems will soon erupt, and we will see some good queries and notices coming for these new data sets. So hopefully, fingers crossed, they should not crop up, but doesn't seem very realistic. So please embrace yourself for new set of data set related notices. And that's it from my end. I'm happy to take any questions, or maybe you feel free to reach out to me. My email ID has been mentioned. So happy to discuss any queries offline as well.
Nihar, there are a couple of queries on chat box.
Sure.
So first is, can you list optional tables in 9 and 9C?
So typically, optional tables I already mentioned during my presentation, like your import HSN related tables are optional. Your purchases from those no, I mean casual taxable person and all of those are optional tables. Then there is an option available for you to not report between input services and capital good. You're allowed to. I mean, so those exemptions still continue, that you're allowed to just report inputs and capital goods breakup. Then, as far as your 9C is concerned, the table 13 is still an option. You need not fill it, whereas 12 is there. 4 का जो option था वो निकल गया, so 4 अभी 12 9C में आपको revenue का breakup देना पड़ेगा. And does 8A exclude ITC of 3B non-filer? No, the answer is no. It does not exclude non-filers, because typically it is coming from your GSTR 1 if that has been filed on time. I don't think so. It's excluding your 3B non-filers. So yeah, that's it. That's it from
participants. Any other questions which you would want to ask Nihar? I think it was a wonderful session, Nihar. Not being a GST person, I could also correlate few things, and the way you covered the flow, I mean, like understanding or refreshing the existing and then covering the changes, and this case study was really a masterstroke. I think the way you have explored and the way you have shared your experience in this session, I am sure all participants will agree that we could not have a better speaker than you on this session and during this time. So I, on behalf of BCAF, I'm really thankful, and I request all the participants to extend our a vote of thanks for you with a big round of applause. Thank you, Neha. Thank you for being.
I just hope I have not added to the confusion of the participants. I was actually telling forum that probably एक सवा घंटे में तो हो जाएगा, but I guess I have overshot.
No, I think this was reasonably well. As I really said, that I really don't practice GST, but I could still make out few things, like what kind of challenges one would really face in the GST audit. I can really see my office struggling for GST audits. I can now correlate the issues. I think it was done really well. So again, thank you on behalf of BCF, and thank you participants for being participative and being attentive on the sessions. Thank you, everyone. With this,
Thank you so
close
much.
the session. Yeah, thank you.
Thank you, Nihar.
Thanks, forum. Thank you.
Yeah.
Bye bye.
Thanks, Nihar. It indeed was beautiful. Thank you. Thank you.